You're listening to the Wired for Impact podcast. All right, my guest today is Jayse K. He's also known as the Conscious Cryptocurrency Coach. Beautiful alliteration there, my friend. So we're going to get into a whole conversation about cryptocurrency and how to best get set up for that. But first and foremost, welcome to the call.
Thank you, brother. Thank you for having me on. I'm super excited to see where the call takes us and what topics we get into.
Me too. I was very intrigued by your content that you put out, primarily on Instagram. You've got a very good grasp of the crypto space, which obviously is very helpful for a lot of people that are moving in that direction. But you also bring a very interesting other dynamic to it, which is sort of the conscious side of your brand, i.e., the spirituality side of things, which I found that initially very intriguing, very interesting. But first and foremost, on a practical level, I find that you really do a great job of articulating the cryptoverse, helping people better understand the connection between all these different concepts. And, at the end of the day, results oriented. How do I profit from this? How do we make money with that? So the intention of this particular call, for those that are listening, this is not going to be a beginner's call. We're going to be talking about some slightly more advanced stuff. But that said, this is for folks who are still relatively new to the crypto space. You have a understanding that blockchain is going to be the future. It almost already is, but we're moving into a blockchain-backed global economy. You may have already purchased some crypto already, so this is not completely brand new to you, but we're going to get into some relatively more advanced concepts, but nothing too overwhelming. So before we get into all that, going back to the conscious part of your conscious cryptocurrency, I wanted to ask you first and foremost, what makes you conscious? What is that? What are you bringing to the table that other crypto experts are not on the conscious element of it?
Yeah. Well, I think I'll give some context on my background, and I think that'll help, create the context for what that means. So basically, just super quick, I went to school originally for aerospace engineering, was going to get my bachelor's. I ended up dropping out my fifth year because I was so disillusioned with the system because I was waking up to originally things like black budget programs and things going on in that aerospace world. And basically that ended up leading to me to my spiritual awakening. So over the next couple of years, I was having spiritual experiences and deeper understandings of what we're really here on earth to do and what this kind of game matrix is all about, and really created a connection with spirit or with God, whatever you want to call it, that I didn't have before. I was atheist really going into college, and then coming out, I had found this connection with spirit. So that is what led me to crypto. Ultimately, was my spiritual path, and for me, I was actually pretty opposed to crypto when I first learned about Bitcoin, in the late 20 teens, like 2017, 18, 19. I just kind of rejected it because I thought, okay, crypto, new world order currency, not good. Like I was putting all these labels on it that later I realized were not necessarily true. And so what really kind of sparked the interest for me in cryptocurrency was learning about this asset XRP, which I know you've done shows on before. You've had other people
Yes.
talk about it. And I know we're going to get into that. So when I found out about XRP, I just was receiving all of these, what I call synchronicities, these signs from the universe that there was something meaningful to it. And it got so overwhelming where I would see the words Ripple and see X's like constantly throughout the day that I was like, okay, I'm going to give in. I'm going to buy some XRP. And I ended up getting some basically right at the bottom of the market, right when COVID hit. It was like March of 2020 when all the markets were crashing, including crypto. And I was able to scoop up some XRP at 17 cents. And yeah, which was a number for me that was synchronistic. And that was one of the things that drew it to me, was that number. So eventually, I'm holding it. And eventually I'm like, okay, I need to understand why it is that this is so important. Why was I intuitively guided to this? I felt guided to really doing the research. So I started to understand crypto more. I was researching XRP, how it was different than Bitcoin, how it was more scalable, cheaper, these things that I know you've talked about in previous shows. So I won't go too deep into that. And then I realized, that there was a need to teach others about this, and that people were also feeling guided to cryptocurrency and to XRP in particular, and they didn't know why, and they needed the same kind of logical, rational, understanding of what purpose this was serving. And so that's kind of what created the conscious crypto idea and name was understanding these concepts, but from the perspective of where is this going to play? How is this going to play a role in humanity's evolution and development? And how are these financial systems going to ultimately affect humanity's expansion and freedom, liberation, sovereignty, and all of these things that we know we're kind of moving into in this new paradigm? So yeah, that's where it came from.
This is one of the reasons why I followed you and why I wanted to have you on the program, because it's one thing to understand blockchain and crypto and how to make money from it, et cetera. It's quite another thing to understand the deeper elements holistically, spiritually, as this new ecosystem is being built out, that there are some assets, some coins, some tokens, et cetera, that are centralized and continue to perpetuate the problem that we're finding ourselves in right now. And there are other ones that are very quite the opposite, decentralized and really provide more power to individuals. So thank you for sharing that part of it. I wanted to ask you, you mention often that we are in the middle of one of the greatest wealth transfers in human history. Can you set
Mhm.
the scene for that and give us a visual as to what that transfer looks like? And then we'll get into which coins, which opportunities you think are the best to be positioned in.
For sure. So I think a good way to compare it is to compare it to the dot-com boom that we saw in the late 90s, early 2000s, more so during that time period, and how at the time, a lot of the media were questioning if the internet was even going to become a thing. There was a lot of fear around, oh, this is a passing fad. This is not something that's going to stick around. It's not practical. But yet the people who invested in the dot-com domains, the people who invested in Google, Amazon, Apple, Microsoft, they became very, very wealthy from that because they had the foresight to see where the technology was going, for better or for worse, but they were able to capitalize on that. And so what I think we're going through now is like that, but you could say on steroids in a way, because it's geared around the financial system, whereas the dot-com boom was geared around information and, kind of the liquidity or the accessibility of information. Now we're looking at the actual financial liquidity and accessibility and the idea of being able to move value around as quickly as information moves around the internet. So really, we should be in a society where you can send money to anyone as quick as an email or text message. We shouldn't have to deal with all these different apps and compatibilities and my bank, your bank, and all this stuff. So there's a massive part of the system that is broken, or you could even say was maybe engineered to be that way in the first place, to kind of siphon that energy to, the people at the top and trickle it away from the people at the bottom, siphon it upwards. So I think this wealth transfer, when we're looking at it tangibly, like what is the wealth transfer actually coming from? Where is that wealth coming from? Well, it's going to be coming from primarily the massive amount of institutional adoption and the money that's going to flow into these projects because of that. And so we're looking at multi-trillion dollar markets, if not potentially quadrillion dollar markets moving into the future. That's a lot of money. And so these currencies that we're going to dive into are setting up the foundations for this new paradigm, just like the dot-com domains and the Googles and the Amazons were doing that for information. So there's basically a really unique opportunity at this moment in time that I don't think humanity has ever seen before in terms of the financial opportunity, where someone with very little money who maybe is not, typically traditionally into investments, like I wasn't raised learning how to invest. My parents weren't investors. They worked, I single mom, well, not single income from my mother, working 9 to 5 job. I wasn't aware of that world. So it's going to present this opportunity for a lot of the average person to be able to create a massive amount of wealth from this transition. And then ultimately, I believe this is going to be setting the foundation for just miraculous changes to come in the wake of this financial redistribution, essentially. And
Mm.
it's really interesting to see the people that are feeling called and guided to crypto right now have some kind of idea or even a plan on what they would do if they had millions of dollars or more, but have not been able to execute on those plans, like building healing centers, retreats, schools, things that they know would actually help the world, but they haven't had the money to do it. And so I think part of this wealth transfers is going to be a lot of those kinds of people who didn't have access to this kind of wealth before, now coming into larger amounts of wealth, that they'll be able to create some really positive change in the world.
Yeah, you know, it's so interesting. I was on a call the other day, and the guy that was talking about, he made a really good analogy. He said, you know, the way that it's been is that if you wanted to get in on an opportunity, if you wanted to invest in a particular company and you had to wait till the IPO until that it's a public company, at that point, the real gains have already been had. And, you know, venture capital has already gotten involved and the huge significant gains. And now we're in a position today where the average person, like you were saying, can invest in some of these pre-ICOs, which is essentially sort of like an IPO to a business on these tokens and these coins. So the single mom can invest, you know, with 50 bucks or 20 bucks or 100 bucks and can see significant returns on those, and it can be life-changing.
Yeah, you don't
So,
need an accredited investor like you do typically with
exactly.
good opportunities in the traditional financial world.
Exactly. You know, it's been coming to me recently too, is to actually journal or write down what you're going to do with the wealth once you get it. And I think you'd appreciate that coming from it from a conscious standpoint is like energetically, it's like we are needing to build a new future. We need a new vision. And what we have right now is not working. And so an idea of a vision where people are creating these health centers and, you know, perhaps helping the homeless, et cetera. It's like there's a real
Mm.
opportunity for good people to make a lot of wealth right now and to do those things, which is exciting. Okay, so let's talk about this wealth transfer and what people might do. What type of projects are you recommending? You've got a program, an academy where you teach people how to do all this kind of stuff, which we'll hear about more later in this call. But what are you recommending people get involved with? What projects for the mass adoption projects that you've referred to in your trainings?
Yeah. So primarily, I'll preface it with within cryptocurrency, there's a lot of different niches. So there's financial technology, there's entertainment, there's, gaming, and that's going to continue to explore different niches. But what we're focusing on primarily is the financial technology, which they call fintech for short. And so what we focus on are a group of assets that fall within the category of what is known as ISO 20022, which is an international standard. The ISO is the International Standard Organization. They create all the standards and units and everything. And this standard is a financial messaging standard that is not just limited to crypto, but actually all kinds of financial payments technology, even outside of cryptocurrency. So this standard is kind of going to be the new standard for the international economy to have this new payment infrastructure. And so I'm seeing, and the people in my academy as well are seeing, that these specific group are going to be very, very profitable because they're going for the largest market caps. Basically, they're going for the biggest problems, the biggest solutions that have the most amount of money involved, which is why, companies like Ripple are specifically aiming themselves in that direction because of that. And then also on the kind of spiritual conscious side of it, these are the ones that are going to be shifting the financial system really from the inside out. And so when we compare it to something like Bitcoin, I talked about Bitcoin earlier and how I didn't get a good vibe about it. And I still don't really get a great vibe about Bitcoin. I respect it as the grandfather of cryptocurrency, and I think it has its place. But already, as you probably know, the technology is becoming outdated. Like all this mining technology, people have probably heard there's big warehouses, people have all these computers, it's using all this energy. That is not necessary anymore. And these cryptos that we focus on are not mining focused, they're not energy intensive, they're greener, they're cleaner, they're faster, they're more scalable. And ultimately, whereas Bitcoin is kind of trying to take on the economy, and a lot of the Bitcoin holders will say, Bitcoin is digital gold. You don't need gold anymore because you have Bitcoin. And that doesn't really resonate with me. I think gold and silver have their place. And I think a lot of people agree with that. I don't think crypto is here to replace gold. So one of the things that I really like about XRP and the other assets we focus on is that they're actually there to empower traditional assets like gold and silver, and even our national currencies like the US dollar, the UN, the ruble, that kind of stuff. So instead of trying to take the system head on and replace it and convince everyone, hey, come over here to this new system, The ones that we're focusing on are integrating with the system. And basically, the way I see it is that they're alchemizing it from the inside out instead of trying to go to war with it.
Hmm.
So that's why we focus on them.
A quick question on Bitcoin. I know there's a lot of differing opinions on this, some very strongly felt, but isn't it possible that the cumbersome technology of Bitcoin is in fact a feature of it in the way that gold itself is kind of cumbersome? We don't use gold. It's heavy. It's you can't, lug it in your car if you're going to go buy a house or something like that. Isn't it possible that that is a feature of Bitcoin because it's slow and therefore it's more of a storage of value because it's so scarce, et cetera? Doesn't it mirror the same properties as gold in the real world?
Yeah, I could definitely see that argument being made. I don't know if the slowness of it is necessarily a feature because I don't see an advantage to like slow transactions.
If it's a storage of wealth and not to be used as like, hey, I'm going to go buy a Starbucks, right? If it's
Yeah.
used for, hey, I've got $4 million, $40 million, 400 million, like I'm going to store it in crypto because I'm not going to be using it every single day, and then I'll use my XRP and these other tokens, coins, etc., for transactional day-to-day stuff. Doesn't it make sense as a storage of value?
My argument against that is that that utility, a storage of value, can apply to any cryptocurrency or really any asset out there in general. And the only thing that I see that makes Bitcoin a better storage of value at this point in time than other cryptos is its stability in the market. So, because it is the number one crypto, it's got the deepest liquidity, but that's kind of a self-perpetuating cycle where if another crypto were to become number one, like if XRP became larger, had a larger market cap than Bitcoin, it would be just as much a storage of value as Bitcoin would. There wouldn't be any really that many advantages to Bitcoin over that. I will say the one thing that I do like about Bitcoin, oh, more than one thing, but one of the things I like about it is that anyone can participate in the network consensus. So like the mining we were talking about, even
Hmm.
though it is kind of cumbersome and slow and older technology, anyone can set up a mining rig and participate in that. The problem is that there are these big mining pools. I don't know if you're aware of this, but there are pools where there's like 5 or 6 main groups like Ant Farm and some of these others. And a lot of those are centralized in China. And so you get this kind of conflict of interest where if you have a lot of these groups under a communist regime, that government is clearly able to express power over that. And this isn't just limited to Bitcoin. Ethereum has similar types of issues, and it's something that I think in general will continue to get kind of worked out within the realm, and the best technology will find its way to the front.
Gotcha. So let's continue on with the conversation of we've got this mass tsunami wave of wealth that's coming. It's heading into the blockchain economy. What are the different tokens and projects that you like?
Yeah, so XRP is our number one focus. That's the one that I'm seeing is really having the biggest impact on cross-border payments and the big money behind the scenes.
Let's
Yeah,
go a little deeper with XRP really
yeah.
quick since you're mentioning that, and then we'll get into the additional ones. I have my opinions, but why do you see XRP as a mass adoption project? Can you share your perspectives on that? I know there's people listening to this who have already probably heard about XRP, who maybe are in favor of it, but it's also nice to hear from other people who are big proponents of it, why they think so, because of the integration in this new blockchain system that's being built out. But I'd love to hear your opinion on that. Why XRP?
Yeah, so the creator, the chief architect of the XRP ledger, David Schwartz, and he's also the chief technology officer for Ripple, the company. He said that he created XRP primarily because he got banned from PayPal. And so I really like that sentiment of creating a cryptocurrency from the idea of censorship and liberating from financial censorship. And so what's interesting is, XRP often gets labeled as the banker's coin because it is essentially trying to integrate and, work with the banks and kind of I see it as put them on a level playing field with us. And so when it comes to moving money around, cross-border payments, bank transfers and stuff, right now, the quickest way that you can move money from, say, just the East Coast to the West Coast of the United States, quickest way to move that would literally be to get cash on a plane and fly it there, which is crazy, right?
Hmm.
Like when you do a bank transfer, it doesn't actually settle the funds if you're going from bank to bank. They use this messaging system called Swift, which is this basically outdated system from the 70s, this old banking technology that doesn't actually settle funds. It just provides the messaging and tells each bank, hey, we owe you this much, you owe us this much. Let's settle this at the end of the month or the quarter or whatever it is. So XRP is positioned to be that instrument, that financial technology to facilitate instant, essentially free cross-border payments, and not just for the banks, but for the average person too. So being able to send, say you're an immigrant coming to a new country and you need to send money back to your family, there's a lot of issues with how to do that in today's world and banks and everything. And this would allow for instant access to funds and moving it around.
I was going to ask you another follow-up question to that. Right now, as of this recording, XRP is trading for 50 some odd cents. I think it's 52 today, which we'll look back on at some point and go, oh my gosh, it was at 52 cents. But anyway, there are some people that are extremely, extremely bullish on the potential price that XRP could be going at. Can you explain some of the economics behind it and why some people think that it could potentially be worth hundreds, if not thousands, if not tens of thousands of dollars at some point in the relative near future? Here we are in 2024, but there are people that are calling for a $10,000 price tag within the next, say, 3 years, even. So, how do we get there economically? Because it goes beyond just market cap. Could you explain that, please?
Yes. Yes. So basically, XRP is positioned to be the bridge between all other forms of value in the world. So this is what Ripple has said is their basically mission statement, is to have it be the international bridge currency and the new financial standard. And that doesn't mean the one coin that everyone uses, the one currency to rule them all, but it means that we're going to have an ecosystem of currencies. Like I was saying earlier, XRP and these other assets support gold and silver and the various national currencies and things like that. So when you think about a bridge asset and value moving across a bridge between different nations, different, central banks and things like that, that is at the very least billions of dollars, potentially trillions in the future, moving in and out of this bridge every day. So billions of dollars in, billions of dollars out, just happening constantly. And in order for that liquidity to be accessible and not create massive fluctuations, like for instance, I'll give an analogy with Bitcoin. In the early days of Bitcoin, if you were to go and buy a house, if you bought something that valuable and sold it on and off the blockchain, you would create massive swings in the market. And that is not predictable or safe for investors, whether you're a little guy or a big guy. So as Bitcoin grew, now you see people doing larger transactions like this on Bitcoin, houses and things of the like, properties that are more expensive, and it can facilitate that level of liquidity. So in the same respect, when we're talking about billions of dollars, maybe trillions, that price of that asset has to be extremely high in order to stay liquid and stable with those kind of markets moving in and out. And so no one knows for sure, what it could be. There's a lot of calculations that people will do on, how much are these markets, what is the sum of all the markets. But essentially the idea is that the value of that asset itself has to, in some degree, balance the amount of value that is moving through it. And if we're talking about what Ripple says, all the money in the world, including debt and things like that, when you consider like the amount of debt that's out there, and it has to facilitate debt as well, not just what's in circulation, we're talking about
Yeah,
potentially
insane.
prices that we can't even conceive.
Yeah.
And David Schwartz, the chief architect, he actually said in a tweet one time that a dollar XRP is not what will not fulfill the purpose or the utility of what this has to do. If XRP was only a dollar, it wouldn't be able to achieve these kind of markets and cross-border payments. And so he literally gave the example of $1 million XRP as being more practical than a $1 XRP, which $1 million is like, people are like, okay, that's just utterly ridiculous. And maybe it is. But the fact that he put that out there makes me think that, even though it seems pretty crazy, maybe that is actually possible down the line in the future when we have this handling all the money in the world.
Yeah, there's even been some credible reports, or I should say semi-credible leaks coming from some substantial institutions. I forget the one exactly. My buddy Versan from the Black Swan Capitalist mentioned, I can't remember if it came from the BIS or the IMF, or there was a significant central bank that apparently behind closed doors had indicated that XRP would be 10,000 plus. So, I mean, not to say that we invest based on that type of speculation, but it's just another data point to factor in. Like, there's real potential here because of the problem that this project solves. And so I think that to me is the big takeaway, is looking at therefore the value that these technologies are actually applying into the real world situations where you can begin to draw some conclusions. And so for those that are thinking like, oh, I already missed the train or whatever, like, no, this train is just barely getting going. So one last thing on XRP, if you will, can you explain the burn rate on that? Because I think that's something else that a lot of people aren't really familiar with, and what
Yeah.
happens when you actually transfer XRP.
Yes, good question. So, a lot of cryptocurrencies out there they don't have a set circulating supply, meaning that they're technically inflationary, which is not always a bad thing. Sometimes inflation, when it's in check, can be a positive thing. But the XRP ledger, which is another name for the network or the blockchain, is not only does it have a set circulating supply, which is no more than 100 billion. So there will always be fewer than 100 billion tokens. It's like 99 point something right now in circulation. And then the burn is, if viewers aren't familiar with that term, burning in crypto means essentially permanently deleting that currency from the circulation. And the way they achieve that is when tokens are burned, they are sent to the what is called the Genesis wallet, the original wallet that essentially distributed the tokens when they were created.
The naming terms are so interesting.
Yeah,
Genesis.
right.
Yeah.
Genesis, exactly. Yeah, but it's like the beginning, right? It's the first.
Yeah.
But it kind of brings in that conscious spiritual aspect as well,
Right. I know.
obviously. So when tokens are sent to that wallet, they're basically non-accessible by anyone forever. And so with XRP, that burn comes into play with the transactions where we talked about how it's essentially free to send money. It's not technically free. There's like a fraction of a penny that you pay in every transaction, which is, almost nothing compared to Bitcoin. Average transaction is $10. Ethereum average transaction tends to be more like $20, give or take. But with XRP, you could send millions of dollars, billions, and pay less than a penny in fees, a penny.
Yeah.
Uh, so yeah, that's where the deflation comes in. So every time a transaction's done, that circulating supply is slowly going down, which over time is going to raise the value of each individual token.
But that also is another indicator as to why a higher value XRP makes sense. Because if you're a bank and you're sending $1 billion worth, or let's say $1 trillion worth, or you're a country and you're sending it from country A to country B, and you're sending $1 trillion worth, if the token itself, if the coin itself is 50 cents, now you're sending essentially 2 trillion of those tokens that then you have a higher burn fee, et cetera. Whereas if the value of it is $10,000 or $100,000 or $1 million, you're having to send less, and therefore you're not deflating it as quickly. So I think there's some reasoning behind that as well. So what about the other projects that you see as mass adoptable, and therefore that might be good opportunities for people to invest in ahead of this wealth tsunami wave that's coming?
Yeah, for sure. And real quick, I want to preface this and say I'm not a financial advisor. I can't technically recommend things. So I'll tell you what we're interested in and why we're watching it.
There we go.
We all have to be careful as teachers within this realm to
Yes,
say we're not
good point.
financial advisors. But the other ones we're watching, second biggest one is the Stellar Network, which is the XLM token. And this is one that's often talked about in conjunction with XRP because they have essentially a co-founder in common. And this person split off from Ripple and XRP. There were disagreements about the direction they wanted it to go. And so they went and basically took a copy and paste of the XRP ledger blockchain and then created Stellar XLM. And there's deeper theories about if they're really competing, if they really have beef, or if they're actually, working together and this is part of a larger plan. But either way, they're both going for kind of the financial payment system. But while XRP is more positioned for the back end, larger transfers, institutional transfers. XLM and Stellar are positioned for the retail end, so more of the front end payments, working with merchants and businesses and things like that. So that's one of the other big ones we're watching. Another one is a layer two on the XRP ledger, meaning it's built on top of it. And that one is called Sologenic. And this one is very fascinating. It's actually the top project on the XRP blockchain behind XRP itself. It's the number one. And they have been given grant money through Ripple. So one of the things that we watch is like, where's Ripple investing their money? Follow the money. I want to know ahead of time, where are they planning on putting energy into? So Sologenic is one of these projects. And what they're focusing on is the tokenization of assets in the traditional financial realm onto the blockchain. So I don't know how much maybe you know about this, or I've had guests talk about tokenization in particular. Okay.
Yeah, explain a little more.
Yeah, so tokenization is the idea of bringing these assets onto the blockchain that don't traditionally exist there. So, for instance, stocks. So, stocks, right now, like we were talking about earlier, there's kind of this barrier to entry in the stock market where, unless you're educated on how to actually go about investing, and in some cases, you have to be an accredited investor to get in, pre-IPO and things like this, you don't have as good of a chance in the market as people with a lot more money and knowledge. So tokenization of stocks, for one, is going to bring that access as accessible as crypto is right now. They're going to be able to invest in stocks. But in addition, we're going to be able to have the benefits of self-custody on the blockchain with our stocks. So instead of having to keep your stocks outside of your personal realm, with a broker or a company, bank, or whatever, you're going to be able to keep your stocks on the blockchain in your private wallet, which is crazy. And then in the future, where this is going is you're actually going to be able to spend your stocks and your crypto and your other assets at the store. So imagine going to the grocery store and paying for your groceries in Tesla stock or Apple stock.
Mm.
And the way that the blockchain works, there are things called automated market makers that I won't dive too deep into right now, but if you want to go in later, we can. But these automated market makers create liquidity and use things called smart contracts to create that liquidity between all these different assets so that you can spend stocks or digital gold or things like that, where you could spend your cryptocurrency, which very soon I think will be most places you'll be able to spend crypto, whether or not they're getting crypto directly or it's, doing a smart contract where it swaps it into the US dollar and they get the US dollar, which is
Mm.
already happening. They have Visa cards with these exchanges where you can spend your crypto with a Coinbase card or an Uphold card. But that tokenization is going to be massive because digital gold, stocks, bonds, ETFs, all these things are coming over to the blockchain. And it's just going to create this whole new era of opportunity and abundance for these assets using cryptocurrency.
What's the symbol for Sologenic?
It's Solo, Solo.
Okay, not to be confused with Solana, which is just
Correct.
SOL.
Yes.
Okay.
Not to be
Um,
confused with Solana, but similar circulating supply. So when you look at, say, the price of Solo right now, which is about 17 cents, it's very undervalued. It's not even that well known within the XRP community, to be honest, even though it's the number one layer two. In comparison, Solana has gone to, I think, $200-300, somewhere in that range at its all-time highs, with a similar circulating supply of around 400 million. So just in terms of the tokenomics, I think Solo can reach the prices of Solana as mass adoption starts to come in, which,
Interesting.
may even exceed XRP returns.
Oh, that's very exciting. Can we take a quick tangent then? You referenced layer two
Layer two.
technology. Can you explain what the different layers are and what those mean?
Yeah. So a layer one, sometimes called a layer zero interchangeably, is the base layer native asset. So when we talk about the XRP ledger, the XRPL, that's the name for the blockchain itself, the network. And then the native asset of the XRPL is XRP. And then, with another project, Stellar would be the network, XLM would be the native asset on Stellar. So what's cool about crypto is anyone can go and create their own cryptocurrencies on these blockchains. And so you or I, we could go right now, we could create a Peter token or a Jayse token on the XRP ledger on the Stellar network. And that would in a way be considered a layer two, though traditionally layer twos build out a little more than just creating a token. So really it's when you create a new token, but then you have a new use case or a new ecosystem that is built on that same network, but it is another token that is not XRP or XLM, that is another layer in. Yeah, it basically is just to create a larger use case for that network that that native asset can't necessarily fulfill.
Okay, makes sense. All right, going back to the mass adoption project. So we've talked about so far XRP, XLM, Solo, i.e. Sologenic. What are some of the other mass adoption projects that you personally like?
Yeah, so another one that we're watching right now really blow up over the past few weeks, in the past 3, 4 months, is Stronghold SHX. And this is a real gem. It's basically the bridge in a way between Ripple and Stellar, between XRP and XLM. So
Mm.
it's technically a layer two on the Stellar network, like Solo is a layer two on XRP. And what it's doing is kind of a similar mission to Ripple in terms of providing financial services to all, but they're more focused on the ACH network and bridging the actual banking system with ACH, which, if listeners don't know, ACH is a automated clearinghouse, I believe. And that's the
Hmm.
network that you use when you use your Visa card or your MasterCard. You do a bank transfer. This is the primary bank network. And so Stronghold is facilitating liquidity using blockchain technology across this ACH network, which is an $80 trillion with a $1 trillion plus market. Over $80 trillion are processed on ACH every year. So massive, massive amount of money. And they are going to be that bridge between those two worlds, between the blockchain world and that world. And what I really like about them as a company, Stronghold, is that they were a successful business first and created a crypto later.
Mm.
Whereas a lot of crypto startups create their crypto and then they have a roadmap and they say, hey, this is what we'll do. Basically, if you invest in this token and we get more money, we can do this, this, and this. But with Stronghold, they were an already successful, profitable business working with banks, providing merchant services to small businesses mainly. And then they have this cryptocurrency that they're integrating into that already successful business plan. And with them, I have a couple quick notes here, actually, because I did a podcast specifically on this yesterday on
Okay.
Stronghold. So yeah, $80 trillion market. They're partners with a group called Nacha, which is like I think it's the something ACH association, maybe North American or something. But Nacha is partnered with all these other financial services. So they're directly and indirectly tied with all these other financial services within that banking world. They also worked with IBM. IBM was their first major client, and they created a stable coin, which is a coin that's pegged to the dollar and doesn't deviate, for IBM to use internally for payment services. They also have a ton of venture capitalist investments from notable companies like the founding team of Square, one of the co-founders of Bancorp Bank, SoFi, and others. So a lot of venture capital money. And it's one of these projects that I've noticed is flying under the radar intentionally. Like they didn't want retail to know, whereas a lot of other crypto projects are blast marketing, telling everyone they can. These guys, I think, have some NDAs and some partnerships behind the scenes. They're actually connected to FedNow, which is the new basically payment system that the US government is doing with the Federal Reserve. They have connections with FedNow. And I think that there's big plans for this token that they didn't want retail to have super early access to, but the cat's kind of out of the bag now.
Mm.
And price wise, this asset has done in the last 3 months 1,600%. So like a 15x and a 25x in the last 5 months. And that's because people are just now finding out
Starting to
about
get
it.
it.
Yeah. And a lot of these XRP people are now coming over and putting some of that money into it. So
Quick two questions. Number one, the symbol is what is it?
SHX. And
SHX. And
it's
then, yeah, go
I
ahead.
was gonna say it's not easily findable because it's not listed on any major exchanges yet, which is one of the pieces of evidence that they don't really want it out there. The best place to get it is going to be a wallet called the Lobster wallet, LOBSTR. and this is something that we teach in my academy. We'll show you how to do all this, all the technical tutorials. That wallet is built on the Stellar network. So you're going to need XLM in that wallet and swap it into SHX. Alternatively, there's a small exchange called BitTrue, which is run out of Singapore, and they are pretty much the biggest XRP friendly exchange. They have the most XRP trading pairs with other cryptos than any other crypto exchange. And they seem to be one of the core partners with SHX in terms of them sending tokens to sell on that exchange. So those are going to be the
Sorry,
two
what
best.
was that exchange?
BitTrue. It's BITRUE.
And they're
BitRue.
based out of where?
Singapore.
Okay.
Yeah.
Okay.
And
Interesting.
depending on where you're at, you might not be able to get access to it. Certain states, the regulatory compliance is not there. So you might go to use the app and, it might say, hey, it doesn't work in your region. So the Lobster wallet is the most universal place that you're going to be able to get it. And for
Okay.
listeners, real quick,
Yep.
there are a lot of fake assets on that wallet. There's a lot of copies of it. So to find the real one, you're going to want to type in when you search their website, which is stronghold.co. If you just type in Stronghold or SHX, you're going to get like 100 different
Mm.
copies of it because it's like this open source Wild West place. We could go and create our own tokens on there and call it whatever. So search their actual domain, stronghold.co, and that'll give you the real asset.
Okay. These are some of the more advanced things that people need to know about because this, yeah, is the Wild West and you can get scammed very easily. So it's helpful to know original source assets, et cetera. So XRP, XLM, Solo, SHX. We'll talk a minute about some of these projects that are off the exchanges because a lot of people, I think, especially for the listeners on this episode itself, they think of like where they want to go buy crypto. They think of the main exchanges, Coinbase and things like that. So we'll talk about how to get those assets that are off the main exchanges in just a second. But any other projects, mass adoptive projects that you like?
Yeah, the last main one that we're focused on is called Corium, and the ticker for that is Core, CORE. There are some other core tokens out there, so it's one of those you have to know where to find
Make
it as
sure.
well.
Yep.
Yeah. But what they're doing is they're kind of like the you could say the Ethereum killer. And there's another network called Flare, which is kind of the same thing that we focus on. As in, when I say Ethereum killer, I mean the kinds of smart contract and DeFi, decentralized finance capability. And I think we're going to get into that a little more
Hmm.
later with the passive income and stuff. But
Yep.
these are the main passive income blockchains that we're focusing on, Corium and Flare. And they are both basically network bridges. So, within the realm of blockchains are kind of like islands in an ocean where they don't natively interoperate with each other. So you can't send Bitcoin to the XRP, your XRP wallet. You can't send XLM to your XRP wallet. They exist separately in their own universes. And so a lot of these projects now are creating these bridges between these islands so that there's interoperability and liquidity access between those different ledgers. And so Corium and Flare are both focusing on that. And there are also places where people are going to be able to, in the near future, take their XRP to create passive income.
So, all right. So the core, no pun intended, but the core projects that you like for the mass adoption to take advantage of the wealth transfer, again, just to be very clear, XRP, XLM, Solo, SHX, and Core, CORE, correct?
Yes.
And
And then
really
Flare
quickly,
as well,
and Flare
which
as
is
well, and then
FLR.
FLR. And
Yeah.
where can people buy Core and Flare?
Flare, I think Flare's more accessible. I believe that's on Coinbase. Yeah,
Mhm.
definitely on Coinbase. You can get Flare there, which is, one of the bigger exchanges. Corium is going to be a little more tricky to get because it's a smaller network, but the Uphold exchange is going to be the best place to get Corium.
Okay. All right. So a lot of these, as we talked about earlier, can be bought on these primary exchanges, these retail exchanges that we're all familiar with, like Coinbase, Kraken, KuCoin, et cetera. But some of these, you've already mentioned SHX, you need to buy them in a different way. I consider these sort of like pre-retail
Yeah.
projects. And we're now talking about sort of the DeFi space. So if we could first sort of set the scene for the DeFi space. And I think another thing that's interesting to think about is on the exchanges, as we're finding, like you can't get every single project. The exchanges really want more stable projects, ones that are sort of tried and true already, that are now available for retail buyers, i.e., you and me. But these other up and coming projects, there's thousands and thousands of them. The exchanges only have a tiny handful of them, but a lot of these are in what we call the DeFi space. So let's first set the scene, and then we'll talk about how to make passive income from it.
Yeah. So DeFi is short for decentralized finance. And that is basically a subset of crypto technology, which focuses on decentralized applications and uses of the blockchain that are not strictly, sending money from A to B. So that's what most people think about with crypto. You just send money A to B. But DeFi opens up a whole new world of possibilities using technologies like smart contracts, which allow for more complicated things like decentralized loans, decentralized insurance. There's going to be a lot more that blossoms out of this. But for us, the biggest aspect of it is basically the passive income that you can generate. And so I would say the most popular of these is going to be Ethereum that uses DeFi. That's the most widely adopted token that is using smart contracts in DeFi. And so, you can go and stake Ethereum and get a certain amount of return, which is basically decentralized interest generation. Now, there's reasons that I'm not a fan of Ethereum, mainly the expensive transactions, especially if you're doing smaller transactions. Like I've literally, gone to send $50 and then I'm paying $60 in gas fees, which is just mind blowing. So
Yeah.
it kind of caters to people who have a lot more money in their transactions. It's not so good for the little guy. The other thing is it's expensive. Yeah, well, yeah, slow and expensive. I already said expensive, but slow too. It can take, 20 to 30 minutes sometimes for a transaction to go through, which is not too practical.
Mm-hmm.
So we're focusing on the DeFi projects that are in that XRP ecosystem and that ISO 20022 financial technology realm. And like you were saying, a lot of these projects are not available yet on the major exchanges because they're going for the ones that they have partnerships with and have what they're seeing as more cultural hype kind of at that time. Like if they think people are going to come and buy it, then they'll list it. So the reason that we focus on the ones that we do is because, like we said with Ripple, we follow the money. So we see where's Ripple investing and we can get an idea ahead of time before these exchanges go to list them, which projects are going to be listed. And then when they get listed on the Coinbase or the crypto.com or Kraken or whatever, they're going to get a lot more eyes and a lot more money flowing into them. So it is kind of like buying pre-IPO in a way, not
Mm-hmm.
technically, but in a way.
Mm-hmm.
So passive income wise, there's a lot of different things that you can achieve within the blockchain realm. There's staking, which is the interest generation. There's yield farming, which I won't dive too deep into, but it's just kind of another thing. There's liquidity pools, which is one of the things that we are getting excited for the XRP ledger, is that they're going to be implementing liquidity pools in the next few weeks to few months here, depending on when the social governance passes. And liquidity pools, for instance, allow for these automated market makers that I was talking about earlier. So if anyone watching is in the traditional financial realm, you've probably heard of market makers, which are people with lots of money that come in and basically make these markets for the various markets. And so automated market makers and liquidity pools are decentralizing that, taking what used to be just the head guys with a lot of money, and now we're allowing people, anybody, kind of with any amount of money to participate in this market making. And so we can create revenue from that basically by providing liquidity to these networks, decentralized liquidity, which basically looks like putting in 50-50 of two different assets, say XRP, XLM, whatever, XRP, USD, into a liquidity pool, say it's $5,000 of each. And then anytime someone goes and trades between these two assets, you get paid out a percentage of the fee that they pay for doing that swap relative to what you have in the pool. And so it's a way for them to incentivize the investors like us to participate in these liquidity pools and provide liquidity to these networks. And so that's one way. Staking is another way. Compounding interest generation is something that we're taking back the power of. So, compounding interest is typically been used against us. Like when you ask people compounding interest, they think of their credit cards mostly, right? And
Hmm.
like how the interest is stacking up. And it's been used as kind of a way to financially enslave us, I would say. So now we're getting the power of compounding interest working for us with our money in our crypto. And that kind of looks like, for instance, Corium, we were talking about earlier. This is the main one that we're using in our academy for staking. It's doing around 25% APY, annual returns, but you can claim that literally as often as you want. So you just divide 25% by 12 months. That's how much you'll get in a month. Divide that by four. That's how much you'll get in a week, so on. As long as you're claiming those rewards more often than once per year, you're going to get that compounding interest effect because you're going to claim those rewards. You're going to recompound them. If you choose, you could spend them, but I would say recompound them. And then you're getting that 25% on a larger and larger base amount every time that you claim those rewards. And, you know, there's a lot of magic that can be done with that, with compounding interest, and how quickly you can 2, 3, 4x your portfolio over a number of years just from getting, 25% every year and compounding that. So there's
Hmm.
a lot of opportunities.
So staking, yield farming, liquidity pools, compounding interest generation, any other categories in the DeFi passive income space?
Off the top of my head, I can't think of any. I think
Those are the
that's
primary
the
ones.
majority of the, yeah, of the different subsets.
Okay, let's talk about staking a little bit more and the economics behind that. Why does that work? How does it work?
Yeah, so it's a little bit different for every blockchain. They're going to have slightly different technologies behind it. I'll say with Corium, the way that it works is there is a slight inflationary mechanism built in. So, like we were talking about earlier, inflation isn't always bad if it's controlled in some respect. If you have uncontrolled printing like the US dollar, that's not a good thing.
Hmm.
But if you have a system where the smart contracts are facilitating how much percentage of inflation there is relative to other market conditions, which is what Corium does to basically keep that inflation in check. That inflation is how those staking rewards are paid out and how you can get such a high APY, like 25%.
Can you explain, just generally speaking, what staking is? I mean, I think just so that we're all on the same page. I know what it is, but
Yeah.
it'd be helpful to have a refresher on that.
Yeah, so it's actually providing security and consensus to the network itself. It's not just a random thing to make money. It's actually a core feature or a core purpose. Well, what's the right word I'm looking for? It's a core function of how the network operates. So, let's compare it to Bitcoin. Bitcoin uses a consensus called proof of work, which is the mining. Proof of work is having mining rigs, and you're doing the proof of work, which is all these algorithms to create the blocks to validate the blockchain. Because on the blockchain, there's no one point of centralization, or at least there shouldn't be. And quick flashback to the conscious side of it. This is another one of those things that I see that make it kind of more of God's money system than traditional money, is that kind of like the neurons in the brain, the nodes of a blockchain are like that, where you have no one point of control, right? There's no one neuron that controls the whole brain. There's no
Hmm.
one node that controls the whole blockchain.
Hmm.
And so that's how Bitcoin achieves consensus. With proof of stake networks like Ethereum, Corium, Flare, and others, they're not doing the mining. They're doing a different kind of consensus mechanism, which involves validators providing essentially liquidity to the network to achieve the consensus and the security of the network. And so you can participate in that by staking your coins, and you're participating in the consensus of the network itself.
Okay, so first and foremost, you do an excellent, excellent job of simplifying these things, but like I need to dumb it way down
Yeah,
even
yeah,
from
yeah.
that. So part of where literally this is where my mind goes as I was learning some of this stuff is like I have to this is so stupid, but I have to like visualize these things. And so when I think of proof of work from a mining standpoint, like I visualize a miner that's going out with his little pickaxe and I'm sitting there going, you need to prove your work. Like, how do I know that you've actually done this job? So when I think of proof of work, that's what I think of is like verifying that the work, that the mining has actually been done, that there actually is an action that's being taken place that is work. On the proof of stake, to me, that's more of like prove that you have a stake of interest, Like if I was buying a company, it's stock in a company, I could buy it literally directly from Walt Disney, where he's proving the work, he's done the work himself, versus somebody who might have a share in the business. They've done jack, but they have an interest, they have a stake in the interest of the company. So I might
Yeah.
buy something from them because they have a stake of interest in the company. So
Mhm.
I had a specific, so staking, is it not essentially like lending? You're lending liquidity and getting an interest on that, or is that
Yeah. Actually,
okay?
yeah, it's kind of like lending, not lending in the traditional sense where, you're lending to an individual and you're going to get a percentage back of whatever you lend or whatever, but it's like lending it to the cloud. You can kind of think about. So like whereas, I like your Bitcoin analogy miner. It is kind of
Yeah.
like a real miner and the computer is the work doing all the
Yeah.
pickaxing. So with proof of stake, I kind of picture it as more like the cloud, internet cloud storage, where you don't have to have these computers doing this physical pickaxing, but you're putting that energy into the cloud, and then that energy there is then serving the greater network and providing a value and function to keeping the network running by having it in that cloud. And at that time, you don't have access to those funds. So that is the lending side of it, where you are kind of lending it to the cloud, you're lending it to the greater good in a way. And then, if you wanted to sell those tokens, you have to go unstake them, which sometimes can be a couple days or a couple weeks, depending on the blockchain. But it's not as instant as other blockchains that aren't using proof of stake.
Okay, so for sort of an analogy, I'm lending money to a friend who's repairing a house. The liquidity on that is not going to be as high as me just putting it in the bank. So the dude might go extra long repairing the house. I can't get the money quite as quickly or whatever, but I'm earning interest on it. What
Yeah.
what what can you walk me through on a practical level? Like maybe there's a project that you can refer to. What is the actual transaction that's happening? You're putting that token, you're staking that token then is applied for whatever. How do I know that I can essentially get that token back? How do I know that I'm not going to get scammed, or that there's not going to be
Mm.
uh, the security on that interest
Yeah.
is essential.
So the security of it in terms of are you going to get your money back from the lendee? It's a trustless system. So that's really important to understand. You don't have to trust other members of the system to participate and pay you back. Where the trust comes in is in the code itself. So that's what the smart contracts are. They facilitate that. So you're not trusting any individuals. You're trusting that the code is going to run the way that it's intended to, which most of the time it should, because you have all these people checking it. It's open source and people can look at it, make sure it's going to work the way they say. But yeah, I'll talk about it with Corium because I'm more familiar with Corium than I am with like Ethereum and others on a technical
Hmm.
level.
Hmm.
With Corium, you have validators. There's like right now about 30 active validators. And these are people who are actually running like the computers to do the validation. So similar to Bitcoin, but not doing all this, what I think is meaningless, intensive work that sucks all this energy. It's more like passively running a small application in the background on your computer, right?
Hmm.
But it does take a little bit of technical understanding and coding understanding, and that's why not everyone does it. But these validators are the ones that are actually doing the consensus. And if you go to Corium's website and you go to their little Explorer tab, you can see in real time the blocks being processed. So you see a little thing and it's like, okay, one block, another block, and it tells you each time which validator is signing off on that block. So they're basically approving the transaction. And it's not like a person sitting there going, okay, this one's good, this one's good. It's automated, right? So it's the computer system and the code going, okay, this looks like a legit transaction. We're going to approve it, next one.
Hmm.
And so we as stakers are basically lending our Thorium to those validators to participate in that consensus. So because I don't have my own network set up, I don't have my own computer running this code to be a validator, but I want to participate and I want to make, an interest off of my coins. I essentially stake them with this validator who is doing that work. They get a small percentage of my fees. So they get to set that 2%, 5%, whatever. And that's what their incentive is. And then they're using that energy basically of those coins to create more security and stability for the network. And that's where it gets a little like it would be hard to explain. I don't even totally understand
Yeah.
the technology of how it creates the stability per se. That's more of
Hmm.
a programmer area.
World. Yep.
That's the general idea.
So if somebody had $1,000, 10,000, 100,000, et cetera, and they're wanting to get better returns from a stable place,
Mhm.
is Corium a place that if you had that money, would you put 10,000, $100,000 in Corium to get that 25% return?
I would, yeah. And not necessarily that I would put all my money in that one project because I think it's good to have your risk mitigated and have things a little bit distributed. But yeah, for passive income, that's the one that I'm focusing on. That if I had a big chunk of money to throw in right now, I would put it in there. And I already do invest in it and have that generating profit for me. So, but that comes down to your individual. Like, there's people out there that are, I'm sure, watching this that are going to be like, screw that one. Like, this is the one for me. This one's
Yeah.
better. So there's a lot of politics in crypto and a lot of divisiveness and team choosing. So I go for what I see as being the best technology with the best chance of having the largest amount of mass adoption and the most security for that network.
Okay. So you kind of glossed over yield farming. Is that more technical? Is that why you don't necessarily get too deep into that one?
Yeah, yield farming kind of encompasses liquidity pools and then some other kinds of liquidity providing. It is a little more technical that I wouldn't be able to speak on as intelligently as I would some of the other ones. But it's kind of a form of staking and liquidity providing that plays out in different ways on different networks where, there are like pools that you can contribute to and generate yield, things of that nature. But yeah, I can't get too technical on it because I don't know the details.
Yeah. So you did mention these other things like liquidity pools and the compounding interest generating. As somebody who's not, yeah, I think a lot of people are just looking at like, where can I put my money to get a solid return? So out of
Mhm.
those different categories, would staking be the most secure, solid interest generating technology that you would put your money in, or would it be a different one of these?
Yeah, for me, I think staking is the easiest and the most accessible and stable of those kinds. So, with yield farming and liquidity pools, there are risks involved with those that you don't have with staking. So, like with liquidity pools, for instance, there's something called impermanent loss, which is basically, we talked about putting two assets in and trading between those, and that's how it generates the profit. If one of those assets were to move really volatile compared to the other asset, like XRP USD, if XRP went to the moon and USD stayed the dollar, that would create impermanent loss where you could actually lose tokens overall if there's a big change because of the way it works. So you could come out with, say, a little less XRP than if you had stayed outside of that pool. That's why you get paid for participating in it to offset that risk. And the goal is to have your rewards offset any potential loss that you get from that impermanent loss in that volatility. And it's
Hmm.
kind of the same concept as the markets where, there's the risk in the market with anything where if you buy up here and then you come down and you sell, well, now you're at a loss. But if it comes back up and you didn't sell, then you're okay. And the same
Hmm.
thing with the liquidity pools and the assets. So on the other side, staking doesn't have that kind of risk. It's essentially risk free. There's always the risk in terms of bugs in the code and things like that, but that's very rare. But in terms of investment market opportunity, it's the lowest risk where you just put your coins there, they're generating interest, and it's out of sight, out of mind. You don't need to think about it. You don't need to mess with it. Very low maintenance, which is nice.
I see. I got caught up in the gosh, I'm forgetting exactly what it was. Was it not USDT, the Tether
Mm,
collapse or whatever. I had staked some money in that, couple $1,000s in that, and I was still pretty green to the whole crypto space. Ended
yeah.
up losing that. What was the vulnerability of that again?
Are you talking about
Remind
USDT or FTX?
Yeah, USDT.
Okay. So the thing with US, I'm not actually sure specifically what you're referring to with the collapse,
There
but
was the there was the collapse of the stable or the stable coin itself was very
oh,
volatile.
are you talking about Luna?
Sorry, Luna. Yeah, 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 yeah.
Okay. Yeah,
Yeah,
yeah, yeah. So that
yeah,
was the
sorry.
one that actually was supposed to be a stable coin and then it basically went to zero.
Yes.
So and I'll talk about USDT as well because USDT does have controversy around it. Um, but with Luna, it's very technical how it happened, but basically they had some kind of weird loophole in the way that they were backing up the stable coin. So some stable coins have an actual backing behind them. They're supposed to have like say this much US dollars to actually back what they got. Other stable coins are algorithmic stable coins, meaning there's nothing actually backing it. It's just an algorithm keeping it pegged to that price. And Luna, I'm pretty sure was algorithmic, and
Hmm.
there was like the main Luna token, and then there was the stable coin, and there was some loophole that was exploited, I think, by institutions, actually, is what it kind of points to, where there was a large amount bought and then sold in some weird way where it broke the algorithm
It was
basically. And
essentially like a hostile attack, wasn't it?
yeah. It was a network attack for sure. And I think it was probably from like I don't want to say groups, but like big, money interests, big financial interests. Yeah.
Um, yeah. So
And
somebody
but
stole my money. That made me mad. I mean,
I'm sorry to
thankfully,
hear that.
yeah. Well, what was a little bit scary is there was a lot of people put their entire, retirement savings because it was, I think at the time, 20% return. And it was like, I can't get this anywhere else. This is fantastic. People
Mm.
lost everything. And, it's funny because I was thinking about putting some more in it, but I'm glad I didn't. So it makes me a little bit nervous. And you kind of have to go through these growing pains. It is a bit of the Wild West and dipping your toe in and being smart about it to not put so much in at any one time is probably the prudent thing to do. But from your perspective, Thorium does present a very stable staking opportunity.
Yeah, and it is important to note that it's not a stable coin. It is a volatile crypto asset like XRP or any other. So of course there's always going to be volatility in the market and you have to be prepared for that. But in terms of stable interest generation, it's my favorite one. It's the easiest. And it's not some random project. That's the thing too, is
Hmm.
some will be like, hey, my friend told me about this project. There's like 20,000 plus cryptos out there. So that's why we're really diligent about in our academy about figuring out not only which ones sound good and sound pretty, but on paper, what's going on? Do they have the backing of other groups that I trust, like Ripple with XRP? They've earned my trust. And so when I see them essentially promoting and funding Corium, which is actually the same development as the Sologenic project, Solo, I was telling you earlier, that's doing the
Hmm.
tokenization. They're the same team. And so they had already won my trust. And when
Hmm.
they launched that token last year, it was just a clear, like, okay, I trust these people so far. They've done a great job, and everything is aligning both intuitively and on paper logically.
Okay, got it. Makes sense. If somebody wanted to stake with Corium, do they go to directly to the Corium website?
Staking is going to be a little more complicated right now. It's one of the things that we'll walk you through in our academy, but you basically you have to get it on the right kind of wallet and then do it on there. But once you have it there, it's easy to do and easy to keep up. But right now, not to get too technical, but it is a cross chain asset, meaning it can exist on multiple blockchains. Most of the time, when you're buying Corium on like Uphold, it's going to be the XRP side of Corium, but the staking is actually done on the Cosmos side. So there's a network called Cosmos, which is kind of like Ethereum. They call them the Internet of Blockchains. It's this whole ecosystem called Cosmos. Native token is Atom. So Corium exists in that ecosystem, and that's where you stake it. On the XRP side, you can't stake it. So one of the things we teach you how to do in the academy is after you buy it, how to bridge it over to the basically the right blockchain island that you need it on to actually stake it. And then once it's there, then it just runs itself. You don't have to do anything else.
I see. Makes sense. Okay, so we've done a pretty good job, I think, of identifying the mass adoption projects. If somebody's looking to take some longer term positions and frankly ride this bull run that we're just starting to kick off here early 2024. For those that are interested in passive income opportunities, we've got a pretty clear strategy now for that. I do want to ask you a little bit more for those that are interested in a little more risk adverse projects who are looking for these really wild asymmetric returns. I'm following some people online who are talking about, it's the 1200% returns, the, 2600% returns, et cetera, that they're getting within months,
Mhm.
So for those that have a little extra money and are wanting to have a little more excitement, are there any projects that you're looking at that has that potential?
Well, honestly, the stronghold that we were talking about, I
Hmm.
think that's the biggest one right now. That
There's
is,
still more upward mobility on that one.
I do think there is, yeah. And you can
Okay.
even just look at the previous all-time highs. So this is kind of a good technical thing to look at with any crypto. What is the previous all-time high price? Where is it at now relative to that? Because that'll tell you in the bull market where it should at least reach that, if not, set new all-time highs. So Stronghold, Solo, and Corium are all ones that are in that smaller category. Not as many people know about them, smaller market cap. If I were to name another one outside of those, XDC is a notable one.
Mhm.
That's kind of like the little brother of XRP and XLM. They seem to be more focused on payments around Asian countries, but very similar type of technology. And a lot of people call them the Holy Trinity: XRP, XLM, XDC.
Hmm.
But yeah, really primarily Stronghold, Solo, and Core, I would say, are those three that still have a lot of potential, and their market caps are very small. Like market cap wise, they're all sitting around 70 to $100 million market cap versus, XRP and others are in the multi-billion-dollar market cap. So lots of room for growth there.
Gotcha. Makes sense. Where do you find new projects and how do you vet them?
Oh, yeah, good question. So I'm really, I just stay really, I do research all day. Well, maybe not all day, but every day I do research. And I'm really involved in these various communities. So what's really cool about a lot of these projects too is even though they're institutional, big money projects, they have these really strong, tight-knit grassroots communities that are building around them. And so to have that kind of institutional and the grassroots community is just super cool. So being involved in those, I see a lot of the smaller stuff as they're popping up. And when new projects are popping up, and which of these projects are investing in these other ones and who they're throwing money into. And then the way I vet them is a combination of what I would call like masculine and feminine energy analysis. So I think, we all have these energies within us. We all have masculine and feminine side. And to me, the feminine side is kind of the intuitive, the guidance that you feel, that gut feeling that you get from whatever higher intelligence you believe in. That's how I initially feel drawn to things. That's how I found XRP and a lot of these other assets. And then I go and balance it with the masculine side. So I'll do the research, I'll follow the money trails, I'll look at the technology. And if they have a marriage, if they have a synthesis,
Mm.
then that's how I know that's a winner for me.
I love how you approach that, man. That's exactly how I think of things too. All right, so just to kind of wrap up this incredible coverage, there's so much value in this for people who actually take this in. I've taken a ton of notes as the interviewer. So I hope those that are listening are actually really taking notes. There is information in this conversation that could make people extremely wealthy if they really take advantage of this. Before I let you go, though, I have to know, how did you buy the Trump Tower? And walk us through what you mentioned that on your Instagram, and so I think that's yeah,
Yeah, that reel
it's
of
kind of where
mine.
things are going, to be honest. So.
Yep, yeah, it is. That reel of mine has gone viral. It's like my most viral clip. And it's funny because I just kind of like pushed myself to make it one night. I was tired, but I was like, I'm just gonna make this, and then it blew up like crazy. So basically the concept of that, what I was saying in the video was I just bought Trump Tower on the blockchain, and this is how you can do it too. And it was referring to a cryptocurrency that I haven't mentioned here yet, so I'm glad you brought this up, called Proppy, and the coin is PRO, and it's accessible on any of the major exchanges. I know it's on Coinbase for sure. And they are the biggest project that I'm seeing focusing on tokenization of real estate. So, earlier we talked about stocks, bonds, ETF, gold, silver tokenization. Real estate is another thing. And, NFTs are kind of a part of that as well, like being able to have an NFT represent a house or a car or concert tickets or anything of value. But even outside of NFTs, real estate on the blockchain is quickly becoming a thing. And what I was referring to was that this group, Proppy, they created this system where you could go and create an NFT of any address in the world. And the idea was they have this three-step system of actually tangibly tying an NFT to a piece of property as a what they call an RWA, a real world asset, meaning that when it is tied, when you get through these three steps that I'll tell you, then that house is actually fully represented in that NFT. And if you sell someone that NFT, then it is legally and technically binded to that property, which is crazy.
That is
Uh,
crazy.
so like what they're allowing people to do is kind of a way to incentivize people to come and join the network and invest as well. Was anyone can go mint an NFT of any property in the world. So I went and I minted Trump Tower in one of the cities. I minted a bunch of like crazy big places, monuments and stuff. And it doesn't mean that I own it because a lot of people were in the comments like, "Bro, you're a scammer, like this you're," and I'm like, "No, no, I had to write in a comment. This isn't I'm not saying I own this. Like my title was a little clickbaity on purpose, but
Of course.
you actually have to own the deed to tie it to that NFT. And so I can't go and actually tie the NFT of Trump Tower unless I own the deed of Trump Tower. And so the idea is that if Proppy as a blockchain and as a business becomes the number one platform for crypto real estate, then people will, if say Trump wants to come along and tie the NFT to his property, he's going to have to come to me and buy the NFT off of me. And it's the same kind of concept as like website domains and how
That's what I
people,
was thinking.
yeah. So
Yeah.
like it's literally almost the same exact thing where like people in the early, 2000s, late 90s, they were buying these website domains, golf.com, apple.com, whatever, just generic things. And then when those companies actually wanted to use those domains, they had to pay them for the rights to it. So same kind of thing, but with property.
That's so interesting. I could see you making a whole marketing campaign just on all the different things that you could buy. Cause yeah, oh man,
That's a good idea.
it's a very good idea. Airdropping. Can you share very briefly what airdropping is, why there's opportunity there? And I'm hearing crazy stories from some of my friends. The last bull run, this guy just said, like, I just made 100 grand. Like somebody literally just gave me 100 grand. I was like, what? What? How does that work? So, yeah, airdropping. Let's
Yeah,
talk about that for a second.
I'm glad you brought that up because I forgot to mention that in the passive income conversation because it's
Mhm.
somewhat related to that, but it's a little different. So, airdropping is basically okay. So, you know how we talked about IPO and ICO, which is initial coin offering. Airdropping is an alternative to a project having an ICO. So, with an ICO, there are private sales of tokens, which is actually a big part of the Ethereum gate conspiracy and manipulation was that they had these private sales of the Ethereum token with these big anonymous whales who were able to come in and buy it before their ICO. And the SEC basically gave them a free pass on that, where they didn't with other cryptos. So there was some
Mm.
collusion. So a lot of these groups now, for the regulatory reason to start, are choosing to do airdrops because basically it's donating their supply of their new project. So say I come up with a new project, right? Say I create a new crypto. I can ICO it and go through all the regulatory hoops and risks and all the gray area because it's not solidly defined, all the regulations. And so you leave yourself open to a lot of BS, basically. Or you can sideline all of that nonsense and donate your tokens to the community where there's no sale. So there's no regulatory compliance that needs to be met in terms of token sales.
Mm.
And so the way it works is that projects will generally donate those tokens to communities of existing projects that they are interested in or think will find their project valuable. So I'll give you an example. Flare token that we were talking about earlier with the Flare networks, they did this with the XRP community. So there was an airdrop for XRP holders where people who held XRP on a certain date, which was like December 2020, I believe it was, however much XRP you held December 2020, you would get a relative amount of these Flare tokens to whatever you had in XRP, certain percentage.
And
And
you have to hold that XRP on a certain wallet or certain exchange or something like that, correct?
Yeah, in many cases, you have to have it. So if you have it on a wallet, you're always good to go because that's the most sovereign way. If you have your tokens on an exchange, that's where it comes down to the exchange, whether or not they're going to keep those tokens for themselves or if they're going to actually give it to their clients, which pisses a lot of people off when they don't, because like Coinbase was one of those that notoriously did not distribute the Flare airdrop. I don't know if they might have eventually, but for a good chunk, I know for sure they didn't. And people were getting very upset with them because they're like, hey, give us our money. Like, stop holding it hostage, right? But they don't have to because there's no legal repercussion.
Jeez.
There's nothing that tells them they have to. But basically, if these airdrops become a valuable network like Flare has become, I believe it's in the top 50 tokens right now, and it's sitting at like 33 cents or something like that right now. So if you got Flare tokens, they might not have been valuable right when they came out, but if you held those tokens, the value would arrive eventually. And particularly with Flare, there's actually still an opportunity to get this airdrop because they changed the airdrop guidelines where it used to just be for XRP holders. They actually did a governance vote, which is one of the cool things about crypto is that the community can vote on the direction of how they want things to play out. It's not just this centralized top down, this is how it's going to be. So there was a governance vote and people decided that they wanted to shift the airdrop so people who weren't holding XRP at that time could still participate in it at all. And
Hmm.
so now there's actually still, you can still capitalize on this. And it's one of the biggest passive incomes that we're doing right now in our academy is that there are monthly Flare airdrops for the next 3 years, or now it's 2 years, 3 years total. We're a year in, 2 more years of monthly airdrops where you will get a certain percentage back every month relative to how much you have in Flare. I think right now it's sitting around 4% a month. It was initially 20% when it first started, and it's gradually gone down. But imagine getting 20% back a month in your
Mm.
token. And at the time, the price was going down because it was inflating basically, but it found its bottom. It's coming back up. And so now everyone who held those tokens through that market are, reaping those rewards. And so this is one of the things if people join the academy, we can teach them how to do still, take advantage of this and get those airdrops. But then after that 2 year period, supply is fully distributed, it's done, and no more airdrops. So comes down to the different networks, how they do it. Some are just here's your tokens all at once. Others are we're going to do it over a year or a couple years.
So fascinating, man. It's such an exciting new ecosphere. All the technology, all the opportunity, of course, a lot of the threats and the scams, whatever. It really is the Wild West. There's so much opportunity here, though, for the average person, which to me, I think is a really nice piece of good news that a lot of people right now, with so much of the inflation going on, people are going to the grocery store. It's like, oh,
Crazy. Food is insane now. I'm like
it's
spending a couple
wild.
hundred bucks every time I go to the grocery store at a
I
minimum.
went
It's
the other day. Yeah, I went the other day and just bought a half a bag of groceries. It was like $70. I was like, oh, geez. It's like, yeah,
yeah.
you're feeling it. So anyway, this is something that can keep up with inflation, possibly even far surpass it. Jace, dude, this was such a great conversation. There's so much valuable information in this. You and I have talked about creating a affiliate relationship. I want to be very clear with that, that I am setting up a referral where Jace would be essentially paying a commission on any referral. I'm setting up a link at impactnow.com/conscious crypto, which will go to Jace's Academy for those that want to learn more about what you're
Awesome.
teaching, which is fantastic. It's going to be obviously no extra cost to anybody that wants to purchase through that link. But can you briefly explain what the Academy covers? You've alluded to it, of course, throughout the entire conversation, but just to recap what the Academy covers for those that are interested.
Yeah, so we walk beginner investors, whether you have no experience or a little bit of experience or even a medium amount, but particularly for beginners, we walk them through the entire process of understanding first the whole space, learning all the fundamentals, learning the basics of the technology, diving a little deeper than we did in this conversation into how like the different technologies and the definitions, all that kind of stuff. Then we'll actually show you how to set up your exchanges first, how to buy on the exchanges, how to sell, and then how to set up your private wallet, which is where you have all the sovereignty. That's where you actually own your crypto. If you keep it on the exchange, you don't technically own it. We saw that with FTX, that big collapse, that big scandal.
Yep.
Public exchange, people didn't own their tokens. People lost a lot of money. So you want to put it on a wallet that's like number one thing. That's where you own it. So we'll teach you how to do that. And then we show you our method of finding these different tokens that we're talking about and how you can find others that are maybe within your niche or your expertise. If you're a real estate person or maybe you're a doctor or whatever, we can kind of try to guide you to projects within your realm of knowledge. And then we end with setting up all the passive income opportunities that we're talking about. So we show you all the different opportunities. You can feel which ones are right for you and what your personal risk management is and however much maintenance and upkeep you want to do. Some of them require a little more maintenance. Other ones are, out of sight, out of mind, just going to sit and generate wealth. And then we also do weekly coaching calls. So you're not just getting the education, but I jump on a Zoom call with you and the others every week, and we go over any questions you have. We talk about market updates. We bring in all the other crazy stuff going on in the world and talk about, how it relates and where things are going and share ideas. And then we have our private community offline too, in our private group. And, that's for questions 24/7 and stuff as well. But really our big intention with the community we're building is that we're creating this network of conscious, awakening beings, people who are on their awakening path or their spiritual path, who have, a good intention or a service that they want to provide the world. And we're creating this group of people who I think in the not too distant future are going to be millionaires and billionaires, maybe even trillionaires. We don't know. But in an international group of people that we're going to have this network to tap into and co-create some really beautiful things together.
It's awesome. It really is in the spirit of this podcast to bring folks like yourself to get more exposure and help create a dent in the world that's inspired by a conscious giving back. So I love that. It's funny really quickly though, how you're like, we're still defining ourselves as billionaires, trillionaires, but that's in dollars. Who knows?
Yeah. Yeah.
The
Yeah.
average homeless person tomorrow could be technically a trillionaire if things continue to inflate. It's like crazy.
And that's where
Anyway,
like XRP might become the new standard in that. Like
right?
we might be looking at everything else in terms of XRP, and a 1 millionth of an XRP they call a drop. So I could see that as, if hypothetically XRP ever reached $1 million, like David Schwartz said, one drop would be like $1. And I could see us being like, oh, here's 10 drops, here's 20 drops. Like
Right.
it flows really well.
It's plausible. I mean, it's there. So I will say really quickly for those that may want to just go directly to your site and or learn more about the academy. I'm happy to have them do that. I don't have any advertising on my podcast or whatever. So the affiliate link, just to be clear, is a way that I can help fund bringing incredible guests like Jayse to you. So if you want to buy through the affiliate program, again, it's impactnow.com/conscious crypto. But Jayse, go ahead and give your actual website address and also your Instagram for those that may want to just follow you directly or go to you directly.
Yeah. So my Instagram is Cosmic Origins, but the O on Origins is a 0. So Cosmic 0 Origins. So my website is consciouscrypto.info. I'm in the process of migrating that domain right now. So I'll give you the link to go to as well. But consciouscrypto.info is my website. And I want to say too, I'm doing a 60% off deal for the whole academy for the month of February. So really good time to get in and take advantage of that. Literally a little bit over 60% off everything. So definitely use Peter's link if you guys want to join.
Cool. Is it possible to extend that? Because this may not publish until the end of the month or early in the month.
We could probably do that we'll figure out a way. Yeah.
Okay. Awesome. Well, there's an incentive then for people to go through the link. So I appreciate that. Jayse, thank you so much again for your wisdom. This was an incredible conversation. Like I said, people, literally, if you take advantage of the information that Jay shared here, and I highly recommend getting into the academy, this is the time. This is the time. This is the path towards greener pastures when there's not a lot of good news going on in the old world markets. This is a much more fruitful path, in my opinion. So anyway, thank you again, Jayse, for this incredible conversation.
Thanks for having me on, man. It was fun.
All right, take care.
Thank you for listening to this episode of Wired for Impact. If you're interested in creating and expanding your impact, be sure to visit us online at impactnow.com.